Big news out of the Bank of Canada yesterday. They cut their overnight rate by a quarter point, which is going to affect anyone with a variable rate or a home equity line of credit. But the big question here is, why did they do it and how is it going to affect you? My name is Miles Noack of the Noack Mortgage Team, powered by Indy Mortgage. And today we're going to take a dive into this rate cut. And at the end of the video, we're going to show you some ways that you can take advantage of these decreasing rates to help you pay your mortgage off faster and save you a ton of money along the way. So let's dive in. As mentioned, the Bank of Canada cut its key lending rate by a quarter point, which is going to have an effect on variable rate mortgages. This was widely anticipated around the mortgage industry, with some people remaining skeptical, myself included, but it was a pleasant surprise yesterday when we saw the rates go down. Now, when we talk about the rate drop, we want to focus on not only what it does to people's mortgages, but the reason it happened. And to do that, we have to look at the economy. But first, why don't we take a look at its impact on borrowers and how it can affect you if you have a variable rate mortgage. With variable rate mortgages and home equity lines of credit, essentially you will have just seen your interest rate go down by 25 basis points or 0.25%. Now, as we've mentioned before, there's two types of variable rate mortgages. There is a fixed payment variable rate mortgage and a adjustable rate variable mortgage, where the payment fluctuates with the prime rate. Both of these are going to be affected in very different ways, so we're going to go through them both and kind of explore each of them. With a static payment variable rate mortgage, as rates go up, your payment will stay the same. You're just going to be allocating less money towards your principal and therefore paying your mortgage off slower. As prime has come down, effectively that's going to put those people in a position where they're starting to allocate more money towards their principal. With these rates going down, hopefully it's going to ease some of that potential for payment shock. I think that is one of the goals of the Bank of Canada. They are worried about renewals and all these variables that are coming up for renewal in 2025, but they're going to have to cut it a lot more than 25 basis points to actually make a huge effect on those renewals, but we'll keep tabs on them and hopefully more cuts are on the way. When we talk about an adjustable rate mortgage, or one of the variables where your payment goes up and down with the prime rate of Canada, essentially you just saw your mortgage payment go down. So let's say you had a $500,000 mortgage on a 25-year amortization. You've got an interest rate of prime minus 90. Effectively, you just saw your rate go down to 5.8%, and you're going to be saving about $74 a month on your mortgage payment. And as mentioned at the end of the video, we're going to go through this and show you how you can take advantage of this to hopefully pay your mortgage down a little bit faster to become mortgage-free sooner, or lower your balance so that when you come up for renewal, there's no payment shock. Now, when we talk about rate cuts and why they happened, I think yes, a lot of it is based around mortgage renewals, but I think there is also a very large portion that has to do with the state of our economy. It is not necessarily in the best shape. When we talk about these economic challenges that we're facing, one of the big ones we look at is actually involving the construction industry. For one, construction projects have slowed to a bit of a halt. For two, we're seeing unemployment rise, and construction is one of the biggest providers of employment in Canada and has been for the last 15 years. So as that dries up, so does the employment opportunities provided by it, which is pushing unemployment up. Now, unemployment right now, I believe, it's up over 6%, and with some people saying it could reach upwards of 8%. That's definitely something that the Bank of Canada is going to be keeping an eye on. Did they want to see unemployment go up a bit? Absolutely. But I think we're getting to a point where the economy is starting to get turbulent enough that it is putting some pressure on the Bank of Canada to maybe perform some quantitative easing versus the previous quantitative tightening that they were applying with those rate hikes. Another thing that's happening is struggling real estate markets. Now, real estate plays a very large role in our economy, and two of the big centers, being British Columbia and Ontario, are quite sluggish right now and slowing down pretty dramatically, mainly in spots like Vancouver and Toronto. And when they did do that previous rate cut, I think a lot of people were expecting the market to explode and go crazy with that quarter point cut they did before. And to be honest with you, the exact opposite happened. We saw a large number of listings come on the market, but a lot of buyers sat there and went, we're going to wait. And that's what they've done. They've waited and they're continuing to wait. And I think as we see rates come down further, we'll see people jump off the fence and get back into the market. But as mentioned in a previous video involving inflation and the cost of living, I don't think home buyers are necessarily just sitting there going, I can't wait for those low interest rates. I think they're actually waiting for the costs to go down, including the cost of a home and the cost of things like groceries. I know there's a lot of people saying they're dropping rates because inflation seems to be under control, but I really do think it involves the economy more so than inflation right now. And on top of that, yes, inflation may be under control, but have you been to a grocery store lately? Last time me and my wife were out, we got 2 bags and it was like $200. And you're telling me that's not inflation? Come on. Now, one of the questions that always gets asked is, are there going to be more rate cuts? The Bank of Canada is asked this all the time at their conferences, even though there's better questions that technically could be asked. But nevertheless, are rates going to continue going down? When it comes to this cut, I was skeptical. I really was. I didn't think for certain that it was going to happen, but it did. And I think anyone that looks at you and says, yes, they're going to cut, or no, they're going to cut, I know for certain, I don't think they're right. No one would know for certain. We can make assumptions and guesses as to what's going to happen, and we can look at the data and make educated guesses, but at the end of the day, it's completely up to the Bank of Canada. Now, if I was to make an assumption as to what's going to happen, I think we could probably see 1 or 2 more cuts before the end of the year. And if we do, they're probably going to be a quarter point each, putting us down probably a total of 0.75% to a full percentage point from where we were at the start of the year, which is definitely going to be a welcome change for a lot of those people with variable rate mortgages. The other thing we have to consider with this is we are facing some economic strain, and that does require attention. Now, the Bank of Canada's dropping rates is definitely going to help people with renewals and mortgages, and it's going to help that economic strain, but it's not a magical cure to the economic situation we're seeing. It's going to take time to recover, and honestly, I think it could get a little bit worse before it gets better. Now, as promised, I'm going to tell you a little bit of an idea that I've seen people utilize to pay their mortgage down significantly faster when it comes to these variable rate mortgages. And there are some caveats to this. One, you have to be in an adjustable rate mortgage. It doesn't work with the static payment one because your payment doesn't change. So for anyone that's had an adjustable rate variable mortgage, you've been feeling the pain, you've been feeling the pinch of interest rates rising. But if we look at it from the perspective of it challenging you, it's been putting you in a position where you're paying more than you ever thought you could. And if you've been doing an annual or a monthly budget to coincide with this to try and cut costs to offset that higher expense, it could put you in a position where you can say, hey, I was paying this before, I'm paying this now. Can I make this that middle ground payment? So as these rates keep coming down, keep tabs on what you're paying, keep tabs on that extra cash flow, either putting it into a savings account, but alternatively, keep your payments the same on your mortgage. If you keep your payments the same because you're comfortable with the payment that you're paying and you let the rate come down and that payment stays up, you're going to start allocating more money towards the principal of your mortgage. And with most mortgages, you can make a lump sum payment of 15 to 20% per year, or you can increase your payments by 15 to 20% per year. So there's a lot of wiggle room there. And the reason we bring this up is when it comes to renewals, if you're in a longer term, hopefully you're going to be coming up for renewals at lower interest rates. However, we can't predict the future. We saw the Bank of Canada say rates were going to stay low and inflation wasn't a problem. That was wrong. So sometimes hoping for the best but planning for the worst can be really, really beneficial. So allocating those additional funds towards your mortgage could put you in a position where you're paying your debt down faster, you're building up equity in your home that's accessible through home equity lines of credit or refinancing, and you're putting yourself in a position where you have a solid nest egg of equity should you ever need it. Now, I want to know your thoughts. Why do you think the Bank of Canada cut rates, and do you think they're going to continue cutting? Make sure to put your comments below, and if you got any value out of this video, consider liking and subscribing to the channel so that more people like you can see these videos. Thank you so much for your time. Hope you have a great rest of your day, and we'll talk to you soon.